having inside information almost always sounds like a really good idea.
Right.
The problem is when you're investing with it, it's literally illegal.
Yes.
But I don't even know if most people know that.
Yeah.
I think if you're outside the finance industry, you just think like, wow, what a lucky break that you have insider information that you can use to trade public stocks. I mean, it seems like this is the ticket.
Yeah. And up until 2006, 2007, which we'll get into, it really wasn't prosecuted too much at the level of the hedge funds. It was usually sort of one-off. So insider trading stocks on information that's material. So if it became public, that it would move the stock price. And so number two, it's non-public. So if I'm walking in my town in New Jersey to Starbucks and I say, hey manager, what was your revenue this quarter? And he tells me it's not material, even though it's non-public, because if I know Westwood, New Jersey's Starbucks revenue that quarter, I can't place a trade in Starbucks stock. But if I fly to Seattle and play golf with Howard Schultz, like Howard, what did you do this last quarter in revenue before it became public? And he tells me, then I can place a stock trade, because Wall Street analysts have their own expectations of what a company like Starbucks or Google is going to report. And 4 times a year, companies have to disclose this to the public. Here's our revenue and here's our earnings. And if you have that information before the public, you can place your long trade or your short trade if they're going to miss or beat the estimates from Wall Street. So if you were to have this information before everybody else, then you can make profitable trades.
And this can be a little bit, it gets dicey, right? Because it can be kind of innocuous. And I'm not going to ask you for a hypothetical here, but because I know you're not a lawyer, but it can be pretty almost innocent, right? You're playing golf with Howard Schultz. He's in a really bad mood. What's your problem today? These idiots, they screwed up this, and now I have to have an earnings call tomorrow. I'm getting my ass chewed out by all of our investors. Well, the earnings call is not going to go well. I should trade on that.
Yeah.
That is also, even though he didn't say, oh, our revenues are down and I'm not looking for, you can read between the lines. He did tell you, and you both had a reasonable expectation that you might trade on that information. I think that's the key, right?
Yes, it's a reasonable expectation, and it's also quite nuanced. Like you said, it's usually not, hey, Tom, here is my revenue last quarter and here's my earnings per share.
Right, here's the spreadsheet.
Here's the spreadsheet, right? It's usually, and my job as an analyst was kind of to grill these management teams, and I meet with them every quarter at conferences, and then if you're the CFO of a company and I've known you for 6 or 7 years, you know me, we're sort of like friends now. And hey, how are things going? And you're sweating, and you're like just looking at me. I can be like, if we own the stock, sell it, or short the stock, because every other meeting I've had with you over the years, you're not sweating, you're going on vacation, and your quarter just ended. Okay, things are good. It's not insider information, but it's like, that's my job as an analyst, to be able to vet that information from you in those not here's the information.
I suppose, but if you're reading someone's mind at that point, how much culpability does that person have? I guess it depends why they sat down with you.
Yeah.
If you're just college buddies and he didn't say anything, but you saw he was in a terrible mood, that's probably one thing.
Yeah, you're okay. In most of these situations today, when I talk, and what I do is guest speaker for compliance training. Usually when that comes up, I tell the analyst to go talk to compliance, because you're not trying to commit fraud if you go to compliance and say, this is what was happening. He's sweating. He said something that wasn't the numbers, but it was enough where I'm not sure what we should do. And that's where you're not going to be in my situation if you're going to compliance.
Right. So your situation, let's get into that. How did you take the first step into the gray? Because if you're investing long-term, why do you even need insider information? You're just basic. Google's going to be good. Yellow Pages are going to be bad. No offense. Not super genius levels of knowledge required to know that the internet is going to displace a giant piece of crap book that nobody uses that's 800 pages long, right?
Yeah.
But other stuff, more short-term, different story.
Right. So in my second job as the junior partner, our first quarter of investing, we lost money. But Jordan, it really shouldn't have mattered, because we were investing over a 3 to 5 year horizon. Yeah. We only had about half the money even invested. We were waiting to find what's called entry points. When the stocks were at levels we'd like, we'd slowly invest. After losing money in the first quarter, my boss came into my office and said, look, I know we're investing long-term. We just lost money in the first quarter. We have to start looking for shorter-term opportunities to make money every month. Or after our first year, if we're down our first year, that's not good, because our investors are going to take their money out. So the goal went from 3 to 5 years to make money every month. So I think one sort of moment here is, if any goal, I think really any business goes from longer term to short term, the opportunity to do something bad certainly increases. And I'd also say that ambiguous message from the boss to me to do what it takes And now me not asking clarifying questions. Do you mean anything goes like these other guys are doing? Or are we going to have some ethical, legal guardrails around this? I didn't ask the clarifying question in that situation.
Sure. So I would imagine it was not something like, hey, I've got this idea to do a bunch of illegal shit and make a bunch of money.
Yeah. It was sort of like I never really thought I would be in possession of this insider information because I didn't have the context inside of these technology companies who were leaking the information at the time. At the time, 2007, 2006, we're talking 60% of companies before they were bought, the stock prices went up well in advance. So that means information is being linked, and you know, all the attorneys, the accountants, the banker working on these transactions, that information can leak. I know it's going on. There's now pressure to make money every month. Maybe it's anything goes, we used to call it. And then a few months later, I got a call from another investor. So this is March of 2007, who she used to work for a guy named Rajaratnam. That's a pretty big name in sort of the insider trading prosecution history. Sri Lankan billionaire, went to prison for 9 years, got out a few years ago. She worked for him. She's like, you know, everybody's doing this, which we could talk about that rationalization. You made me a lot of money, Tom, over the last few years on these great sort of Google Yellow Page ideas. Thank you for that. That's going to play out. I have something for you, Tom, but you can't tell anybody. And she said, now there should have been a red flag there. What do you?
Yeah. Well, this must be totally above board if I can't tell anybody.
So I'm sort of like, let me listen to this. And she said, a Moody's analyst. So there's, not to be too technical, there's two bond rating agencies who rate corporate bonds, Moody's and S&P, who has this information, who was roommates with her cousin. So we'd have to sort of get the whiteboard here.
Yeah. Tie the strings and the photos.
Exactly. Told her that this company, Kronos, a tech stock, is going to be acquired in a few weeks. Here's the date, Tom. Here's the price. And here's the private equity firm who's going to buy the stock. Now, right there, that sounds like illegal inside information. So I continued to hear her out, and she gave it to me, and we kind of, you know, went through there, hung up the phone. And now I knew this woman to be sort of what I'd call a rumor monger. There's a lot of rumors in Silicon Valley in the stock market. She calls with these things. Half the time it's a rumor, it's not true. But the information sounds so specific. On the first day, I didn't make any trades in this stock because to me, at least with my moral compass still intact, I thought, this is illegal. Now I also sort of thought, I should probably end this relationship too if this is the way this woman is digging up.
Yeah, never call me again.
Information, yeah. And so, but I was intrigued. I never had sort of the answers fall into my lap to the test like this. And then later that day, a friend calls me from another firm. He's at what's called a prop trading firm. So you only get paid that month at his firm. If you're up, he's down. He's like, dude, are you hearing anything? I could put a short-term trade out there. And like, this woman just called me this morning, Moody's analyst, Kronos, in a few weeks. Now, just right there, so people know I've actually broken the law, at least civilly, by tipping this information. I haven't even traded yet. The SEC, who has civil enforcement, could come in and actually sue me for what he makes. I don't trade it. I say, do it. If you want to trade this, I'm not going to do it. I don't do this kind of thing up to that point. He hangs up the phone, apparently blasts it to his whole firm. Call options are moving into stock. So this is if you're going to make a leverage bet on the stock, I want to make a bunch of money, you buy options. Call options start moving. The stock starts going up. He calls me back a few days later. Dude, we're all in. Did you buy any yet? And as the junior partner at my firm, so when an employee commits fraud, it's usually the fraud triangle. There's a need to commit fraud. So I didn't really have any need in my life other than my goals became very short term. So maybe that's a need. There's a rationalization, which we can talk about, and there's an opportunity to commit the fraud. So at my firm, the opportunity was I could buy a stock in our portfolio and not have to talk to the boss as long as it was less than 1% of the assets we manage for clients, like a very small position.
Right.
So I calculated and felt, I think I was having a little bit of FOMO too. Like these guys are making money off this information.
Yeah.
I'll buy a lot less than them that I know that they bought the amount of shares he told me that they're buying. Like I'll buy a little bit, take some crumbs off the table and nobody would know. And if my boss has a problem with this, if his directive to me was like, stay within the law, he'll sell the stock before anything happens. So I bought a 0.9% position. And my rationalization was, seems like everybody's doing it. Who am I hurting?
Right.
I'll do it just this once and never do it again. And I also said I'm taking a flyer, which was colloquial for a small position. And by using euphemistic language, it actually helped me not feel as bad about breaking the law. I never said I'm insider trading. And I learned later, years later, when the FBI invited me to speak, other types of fraud like this, people use euphemistic language. Like if you're paying a bribe, it's not like here's a bribe, here's a toll, here's a tender to get business done. And it creates that psychological distance between myself and the illicit act. Because years later, people say, what were you thinking? And it was all a very slow, slippery slope of like, this is how I rationalized it. You know?
Yeah, sure. No, that actually makes a ton of sense. Okay. You play small, you mix it in with a bunch of other stuff, doesn't look too greedy, you kind of assume that you're safe. But the environment was around you was what? Everybody else is really doing this. It wasn't just something you told yourself. It was seemingly it was something you actually knew was the case.
It seemed like it was not even being prosecuted. At that time, they were looking more at these boiler room, you know, selling granny penny stock scams. They weren't even focused on hedge funds and insider trading. And these bigger billionaire guys were doing it. And so I felt this would be like dropping a rock in the Grand Canyon. Like nobody would ever know my little small little trade.
Wow, man. It's kind of like doping in sports. If you're the only guy on the team doing it, it's a little weird.
Right.
But if all the other top hitters or whatever in baseball are doing it, pitchers, whatever, then it seems like you have to do that. But also it seems accepted because surely everybody kind of knows and looks the other way. Yeah. And then it becomes sort of ingrained, I guess, in the culture of what you're doing.
Yeah, it's so much the culture. Like if you would have told me when I graduated from Penn, you know, a few years later, you're going to be insider trading. I would never do that because I'm a good guy. But then when you're desensitized to the culture and everybody's doing it, you can get inside your own head pretty deep and convince yourself that I went home that day after buying that stock, committing securities fraud. And I woke up that morning, had my normal morning, not going into work saying, I'm going to break the law today. And it was just a few keystrokes.
It's not that you went and stole the answers from the teacher. Someone called you and said, hey, I got the answers.
Right.
Do you want them?
Yeah.
And you just didn't say no.
So when I speak at universities today, I say, imagine it's coming up and you've got the multiple choice and it falls right there in your lap. Are you going to throw it away? Are you going to take a peek? I mean,
yeah. Oh man, that's tough. And then how did this starts to grow, right? Because it wasn't just like, wow, this really nice lady's calling me with all this free information that I'm required to do absolutely nothing for in return. How did it escalate from there?
Yeah. So she calls me. I placed the trade. It was maybe another week. It's a Friday morning. So it's March 23rd, 2007 to be exact. Before the stock markets opens at 9:30, I meet with my boss to go through our portfolio. Is there anything new? Should we buy, sell, whatever? And so it's news on the Bloomberg Newswire. I see trading in this stock is halted, which means news is coming. Word for word, exactly what she said. So I'd love to tell you here, I had some moral epiphany like, uh-oh, this is not, because I was sort of telling myself, maybe it's a rumor. She's full of it. Oh, it's a rumor. No, I went in. I kind of felt like an adrenaline rush, I hate to say. Now I'm part of this illicit in-group who has this information. I want to say today, I'd love to rewrite history and say I was disgusted I did this, but like at the time, I thought, now I'm part of this illicit in-group. And a few minutes later, she calls me and says, did you see it happening? It's on the tape. I said, yeah, I saw it. She's like, I hope you loaded up. I'm like, I bought a little bit. And she's like, oh, my entire personal account's in this. I remember thinking it's probably not great that you put your entire brokerage account in this.
Yeah, it looks a little bit, nobody's that sure about a stock ever, unless they are.
And then she says, you know that Moody's analyst I told you that gave me the information? I said, yeah. She said, Tom, I gave him your name. And I said, Tom, can you write him a check for $10,000 for this information? And you can imagine what I said after that, a lot of expletives. Like I rationalized the trade, but like, I'm not going to pay this. I'm not going to give this guy a check. Are you kidding me? But she said, he's going to have more like this. If we want to keep them coming, I have to take care of this guy. And so I said, let me think about this. I called my friend who the entire firm bought it. I said, this is the situation. Can you pass some cash around? I'm not going to write a check. And my scummiest moment, one of a few, I think, is he gets this cash together from his firm. He meets me at Grand Central, slides me a FedEx envelope. I'm going out to meet this Moody's analyst in New York. He's on the sidewalk and he says, are you Tom? And I just held up the envelope. I didn't look at him. I kept walking. And I remember thinking, it's a weird thought I had when I'm walking back to the office. I thought my grandparents would not approve of this right now.
Right. Yeah.
And that's always a good test, actually. If you're at that slippery slope or that area, what would you ask yourself? If your grandparents read this in the Wall Street Journal tomorrow, would they be happy with what you're doing? So,
yeah. Wow. That's a big jump.
yeah.
Right. You go from, all right, I guess I got this tip. Wow. It looks like the tip was legit. And then she's like, by the way, we need an envelope full of cash delivered anonymously to this guy who, by the way, knows your name. I mean, I would imagine at that point, are you not thinking, why did you tell him my name?
Yeah, well, that's what I was asking her. I had all these expletive-filled tirade. I'm usually a calm guy, but at that point, like, why would you give this guy's name, my name? And I was so in my head, I'm like, I could have ended it there. What is this guy going to do? Go to the FBI and say, hey, Tom didn't pay me my bribe? But like, But I'm like, I'm not going to touch the cash. These guys will do it. If they'll take care of this, I'll get this done. I kept saying just this once. I'll do it just this one time. That kept going on in my head. I'll pay it. I'll pay this just this once. And then it happened 3 more times. She would call. I'd tell the other guys. I would buy 0.9% position. The boss was looking the other way every time too. So that's something where the stocks are up 30% in the pre-market before with this news that came out that nobody should have known about. I buy these stocks. One of them was Hilton Hotels, and we're a tech stock focused hedge fund.
I see.
And so
you're suddenly buying a real estate.
Well, he didn't say like, whatever. Are you right? Did you stay at Hilton or what's going on?
Yeah, like I really enjoyed my experience at the Hilton, so we're gonna throw in $30 million.
Right, exactly. And so the boss is looking the other way. So again, more of the rationalization. I kind of feel like if he's okay with it, and he's the closest thing to a mentor that I had in my 20s, then he would have asked me questions about this, and maybe he's fine with it because they are small positions. And so it happened 4 trades through 2007, 0.9% positions. The firm made just over $1 million for our investors, and we managed about 100 million, so 1% for our investors. And we were up 30% before that, so 1 more percent. There was no reason to have the 1 extra percent. Of the 1 million, 1.2 million, as a junior partner, what I made, and essentially what I threw my career away for, was $46,000.
Oh man!
At 29 years old, like that's the price of professional suicide. It's not millions of dollars that you get arrested for. It's $46,000 was it.
Oh, that is so hard to hear, man. Because you go from not even actively seeking the information to maybe seeking the information to bribing somebody for the information. It almost seems like, and maybe we'll come back to this, but why didn't she pay that guy?
Yeah. I think subsequently on the next ones, I said, I'm never doing this again. I think she took care of him on the other. I think she was getting a lot more than the 4 I got. I think it was going on for a long time.
Yeah, like maybe the guy was making $100,000 every time he gave the info.
And he had apparently other hedge fund clients who he was leaking this to. So his little side hustle was getting paid by other people. But
I just don't have I don't want to say guts because it doesn't really take guts. I mean, I just don't have I could never tolerate the amount of stress involved. Like imagine that guy or even your position, you're doing something wrong. You got all this cash. Like that guy probably had $1 million in cash somewhere. And now he's got to launder the money, I guess. Yeah. Because he's making 150 or 250 maybe at Moody's. And then he's getting envelopes full of cash from all these hedge funds. Unless he was a dumbass, he was probably making at least $1 million a year leaking this information.
Yeah, he probably was. And he's actually the only fugitive in these cases. Years later, he was from India and ran back to India and never found him. So,
wow. Okay. Yeah. So he had a plan.
He had a plan.
Because I was thinking, what do you think you're going to do?
Yeah.
And he was like, I'll go to India.
I'll go back home. Yeah.
Wow. Okay. Well, there you have it, I suppose.